The market has welcomed the Reserve Bank's move to leave the interest rate unchanged at 7%. The Monetary Policy Committee's decision comes despite the ease in inflation to 3.3%. Business anchor Tumisang Ndlovu brings us more reaction. Tumisang, talk us through the latest reaction to the SARB's hold on the interest rate.
Thanks, Masai. Good afternoon to our viewers as well. We heard from some analysts a short while ago indicating that the Reserve Bank did in fact have a little room to cut, but they chose not to, leaving the interest rate at 7%. But for more reaction on this and maybe the implication for homeowners and many of us as South Africans who are still servicing debt, we speak to ABSA's Kamini Ramsaya. Thank you so much for your time, Kamini. First of all, your initial reaction to this decision?
I think it was very much expected because with the Reserve Bank, targeting a lower inflation, we had anticipated that the repo rate will stay stable. And actually, we do anticipate the repo rate will be stable in the short term, up until 2027, where we expect rates to start coming down.
Stable is really what most South Africans would be comfortable with, but the exciting part of the news is that the near-term outlook is a cut of some sort, which would be more relief. When are we likely to see that happening?
So we are looking at 2027 when we're starting to see rates come down. Look, there's a lot of pros when it comes to stable rate environment in the property market. Consumers now have a bit more stability and certainty in terms of what is going to be the borrowing costs, what is going to be the interest that they're going to be paying. So it does have its, pros in the market. We're likely to see even first-time home buyers return to the market with stability. Investors find the stable rate environment a lot more attractive for them as well. So I think it does bring good, it removes the uncertainty in the market at the very least.
Absolutely, and sentiment had been picking up with the recent repo rate cuts that we saw in 2025. But I'm also interested, Kamini, in finding out whether a hold on interest rates is a good thing, particularly as you speak of stability for a consumer who was hoping and crossing fingers that at least there'd be more relief. This is not too bad, I would assume.
It's not too bad because we won't see the deterioration. Where consumers have not yet fully recovered, in terms of affordability. At least they know that their household income is not going to be, adversely impacted. So stability is a good thing in the environment, and stability, for a short period is good. At least they know what they're looking out for. We also expect, consumers to go out there in the market to have a bit more confidence, knowing there's certainty in terms of the rates.
Are we seeing the younger new entrants within the property market, given that not everybody can wait for much lower interest rates, especially after, the COVID-19 scare, where you would buy a property only for interest rates to spike up and you are paying far more than you had anticipated?
We are seeing that the younger generation, also your what we call the lower income, coming back in the market. In fact, we've been seeing a bit of a turn from last year. And as rates came down as well, they're starting to come back, where they have essentially withdrawn from the market when rates went up. So it's picking up. The younger generation always finds property, a good investment opportunity for them. So they're looking for that stability, and property provides them with that.
Inflation targeting is a big debate currently. Does that bode well for the property sector in the country?
Absolutely. I think at this point, with having going into this environment now, what you will find is that there's going to be a bit more interest in the property market. So there's going to be activity. We are finding that the house price inflation, annually has been growing, but month on month we're seeing it be plateauing and being a bit more stable. So that will follow in terms of annual inflation, plateauing. But with more activity in the market, it will have an impact gradually have an impact on property prices, which means property prices could then improve in the market.
Thank you so much for your insights. That is Kamini Ramsaya from ABSA talking to us in reaction to that decision from the Reserve Bank's Monetary Policy Committee to this time around leave the interest rate unchanged at 7%. But as we've heard from other analysts, there is still room for a little bit more relief, Masa.
Well, thank you, Tumisang, for that update as well as we get those breaking news as well coming from the MPC this afternoon.